Good morning, everybody. Welcome to the Flow Show. We've had the big UK CPI data, so we'll be discussing what that means for the Bank of England shortly. Morning, Kay. How you doing, mate?
Hey, morning, Ryan. Morning, everybody. It's Wednesday, cutting the week in half, a US holiday. What are we doing here?
Yeah, that's my question. The tossers made us get up at 7 a.m. for that data.
Yeah, absolutely, as well.
Had to cross the picket line
I
on my own
think
strike.
I think after the Flow Show, it's really high time to hit the pub and let the rest of the day go by.
Yeah, I think it's going to be one of those days, but you never know. Sometimes you can get some volatile moves in these days, the odd headline or something when no one's waiting for it, and off we go moving. But plenty of stuff to discuss in the meantime, so let's get right into it. Over in China, we've had a few comments out from officials and the PBOC governor. So we'll start with those. China's safe. The Securities and Foreign Exchange Commission thingy said they will resolutely prevent the exchange rate from overshooting and will make flexible use of their deposit reserves and other measures. This is one of the first comments from officials, shall we say, on the exchange rate. That's not the norm. We will keep things stable stuff. That's what they usually come out with. And I've been thinking for a while about my long-held shorts in dollar China. I've decided to fold them up this morning. We're definitely not going down anymore, but we've been on the creep higher. I'm thinking maybe we're due for an upside move, but that comment, they will prevent the exchange rate from overshooting, sounds to me like they are willing to let it go for a bit of a walk, as long as it's not moving excessively. That's not a comment that says we will not let it move. It's a comment we will not let it overshoot. They are still in easing mode over there, and the PBOC governor has been speaking about that as well. He said that they're going to be looking at Treasury bond purchases, which is something that's been floated around, but they've been very strong in trying to clarify that these do not, or in his words, these do not equate to Western quantitative easing. And it says it should be noted that incorporating bond trading into the policy toolbox does not mean QE. It's more viewed as a liquidity management tool. Yeah, right, whatever label you want to put on it. Government or the central bank buying their own bonds is QE. I don't care what they say, but that's what they're looking at also. So still heavily in easing mode, and now with that comment, we could be seeing dollar yuan maybe heading up as the yuan weakens some. Kay, what are your thoughts on the Chinese stuff?
Well, absolutely. If you buy your own bonds, that's a form, at least a form of QE. It's like Japan saying that the reduction of JGB buying is not a monetary policy tool. It's interesting, and we're back on dollar China fixing, watching then to see if they let it slide or not. They could be tempted to gradually relax it a little bit. I wouldn't like anything less. I'm slightly long again dollar China, but nothing of the likes of really calling it a real speculative position. But yeah, it's interesting. It also will likely tell the investors that it's perhaps not time yet to pile into China, because if they need to do it, that means that other measures may not have helped the way they would have liked it. And yeah, I think it's just as you said. Probably they will let it slide a little bit. So yeah, if for us traders, there's two things or a couple of things to watch to keep it simple. Watch those fixings and see if they send in the submarines to counter any moves that we would see on the back of it. So and if they don't, because they have in the past in this zone, they were relatively active, sending out the local Chinese banks when dollar CNY rose a bit too much, sending out those banks to buy Chinese yuan, and we will have to see if they continue to do so or if they let it slide a little bit. And in which case, we could probably see this thing up into the 730s on the CNH side, the offshore side, relatively soon, perhaps.
Yeah, we've got a bit of a level here, as you can see, around the 728 area. Yeah. Been a bit of an on-off level, and yeah, it's always pertinent to listen to what the officials say over there, because they can be very clear on what they want the currency to do, far more clearer than a lot of other central banks, bar maybe Jordan, the SNB. So if they drop some signals, you need to pay attention to them, especially if you're trading it. And as I'm on the wrong side of where it might go, I've decided to have enough after months and months of sitting in this one. So yeah, we shall see. We shall see.
Yeah, indeed this level is where they sent out the local banks to counter it. So if they would let similar levels go, that would be a bit of a signal.
Yeah, exactly. Right, over to the Bank of Japan. We had the minutes at the April meeting, so the one before the one we've just had. So they're not really much use to anyone. The main gist of the conversations going on there was around the impact of the weak yen on inflation. That were the main big discussions over there. So not an awful lot to take from that. We will, the minutes from this meeting is probably more pertinent, but those were out anyway. There's a story coming out of Bloomberg that said that Japan is going to consider issuing bonds with shorter maturities. And an expert panel is likely to endorse the broad outlines of the plan on Friday. Now, this is obviously something to be considered. What the government does if rates are going higher, they're going to be paying up more for borrowing money. So one of the ways around that is to go down the short maturity route. The reason being, obviously, because yields are much lower. If you take a look at something like the 2 year, we're still not even at 0.3%. Where meanwhile the longer end, 10 years, pretty much around 1%. 20 years, 1.8%. So that's one way around it. Means they're probably going to be issuing more. I just think, Kay, but is that their little trick to get around higher yields?
Yeah, absolutely. I mean, it's actually interesting to note that the short end hasn't picked up on it. It's been extremely quiet when they came out with that. I was looking at the short end, sorry, a little earlier, and it didn't really do much. Which when the Treasury comes up with those kind of things on their quarterly schedule for their bond buying, if they switch from notes or bonds into bills and the shorter end, I mean, it usually has a little bit of an impact, but this time it did not. What is interesting as well is that, put it into context with what the BOJ is planning to do to reduce their bond buying. Of what I understood when they will have those meetings with the market participants, they're kind of hoping that GPIF, the insurers, will kind of fill in the void. But here the government is seemingly saying, well, if you buy less bonds, then I'm going to issue less, and that actually takes a little bit away of the upside that we can see in the longer end yields, right? And translated to FX, I don't think it's very positive for the yen either. This one.
Yeah, definitely. And it's a Bloomberg piece, so we'll have to have it all confirmed first and foremost and see what the actual details are. But yeah, something that we're going to need to keep an eye on. Would that change the metrics of the BOJ in their purchasing? Because they might obviously be forced to go down the short end as well.
That is a very, very good question, which I haven't thought about it really. Would they go also on the more shorter end? No, I think that they specifically said that they would like the stuff like the 10-year and so on to move a bit more freely. The short end really is where they handle the interest rate changes, right?
Yeah.
It's an interesting question, but no, I don't think it's going to affect too much the plans of the BOJ. If anything, um, that could mean that they may have a little bit more room actually to just scale back the bond buying, because there will be less issuances in the longer end from the government side.
Yeah.
But I need to reflect on that question a little bit.
Yeah, because it might mean, if they're going to continue bond buying, they pick up more of the short-term paper if that's what the government are issuing. But it also means they may not need to reduce the balance sheet as much because they can just let it roll off as it's all short-term maturities.
Hmm.
It's something we'll have to keep an eye on and see if that affects anything. Not that the QT angle was done much for most central banks in terms of price moves, but one to stick on a post-it note and come back to later, I think. Right, over at the RBNZ, their chief economist Conway says inflation may be more sticky in the near term, but it could fall more quickly in the medium term. Says there's no magic formula for when the official cash rate will decline. Need to see inflation sustainably in target. Coming over to the data, and we'll look at the UK CPI data, inflation data, big old chunk of it, CPI, PPI, RPI, DPI, whatever you want to call it, lots of it coming out. Headline numbers came in as expected. Headline CPI coming in at 2%, bang on the BOE's target now. Core number coming in as expected as well, 3.5%, 4 pips off last month, still above target if you want to look at things like that. There is a services number within that. That came in at 5.7%, 2 pips up over expectations, but 2 pips below last month. That's one of the figures a lot of people have looked at to pretty much rule out a cut from them tomorrow. Though some of the things that I've been reading about it, that services number may be a bit elevated because it could contain the minimum wage rise that hit in April. So obviously services, that's a lot of hospitality, bars, restaurants, that sort of thing, big user of those minimum wages. So that might be an influence there that gets washed out a bit, or we could see that falling back a bit in the next reading. But for now, it is what it is. PPI data as well, a little bit softer than expected on the monthly numbers, but the year-on-year numbers not as low as expected, 1.7. So it went up. PPI output, that's probably the more important one, went up 1.7% versus 1.1% previously. Input prices was down 0.1%. So there's a little bit of you can look at this a little bit of a margin trade, i.e. Producers are paying less for the stuff they bring in to then manufacture or produce to go out. And those prices are still coming in a little bit hotter. So they're making more money, you could say, on the margin, but it also shows that they're charging, or prices are still going up at the end of the line. So the main headline is going to be the CPI number, though, bang on target. I said if it came in below that, as it like we saw one handle on it, then that might push the BOE to a cut tomorrow. I think that's probably off the table, though. This being the Bank of England, you can never rule anything out from those guys. But I think now we're possibly in a situation where tomorrow's going to be mainly about whether they indicate a rate cut to come over the months ahead, be it August or later in the year. So we're going to be trading around the calendar again, not whether they cut at all, but when they cut. And I still think that might be indicated by the votes tomorrow, but we'll talk about that in greater detail. Do you have anything to take from this data, mate?
Well, I think we are in agreement. Not enough for tomorrow, but enough for August, shall we say?
Yeah.
To keep it like really simple. Then you can, of course, dissect everything, but this is, It's all relatively as expected, and we are not going to really dig too deep in a PPI coming out 0.1, 0.2 from expectations. We know PPI is a bit volatile. You look at the CPI data; they're all sort of where we expect them. I've seen some comments saying like, yeah, but if you look at the month-on-month CPI 0.3, that's still if you analyze it, it was still coming out above around the 3.5% mark. But who knows what the next number is going to be? So I think we call that in line. I think that's enough for Bailey tomorrow to come out and say that they made the progress, or the Bank of England in general, that progress is made. Likely balancing even more, evening even more out the votes for tomorrow, but just perhaps just not there yet. But August, I think, is not going to call it a done deal, but it's more or less there now, right?
Yeah, I think so. I'll have to check how many CPIs we get before that August meeting. Probably going to be early August, so we probably get one more CPI before we get to that meeting.
Let me see. It's actually on the 1st of August, the next BOE.
Yeah, so we're only going to get the one CPI reading before then. So that could be the final clincher. But as I say, we could get an indication tomorrow as to what their plans are. Maybe. You never know with those clowns. Right, coming back to data from yesterday. Big numbers out of the US were the retail sales number, which came in a little soft, not disastrously soft, one could say, but they were, a little bit softer. Headline retail sales only coming in at 0.1%. Ex-autos down 0.1%. Ex-autos and gas coming in at 1%. Again, a lot of these 0.0 points coming in. There was a little bit of an improvement for the control group. That was down 0.5% last month, but it came in up 0.4% as expected. So, as I say, a little bit of soft data, nothing that should shake any markets, and it really didn't shake any markets. But obviously, since then, we've had a ton of Fed heads coming out, which I'll get to in a minute. And then that slightly weaker data was countered by a decent set of numbers in the industrial production and manufacturing production numbers, both coming in up 0.9%, beating expectations and turning around some negative numbers, flat numbers from the month before. Capacity utilisation also improving as well, 78.7. So again, we're in that situation where you get a bit of bad data, then something else looks a bit better, and then something else looks a bit worse, and so on and so forth. Business inventories, that was up 0.3% as expected. This number fairly important because it does have an impact on GDP. But obviously, this will be coming into Q2 data, but we know we had a weaker Q1 data, and the March number for that was down 0.1%. So that probably impacted that. So it could mean we see a bit better Q2 data, but there's lots of stuff that goes into that pot. Over to the central bankers, and just in case you weren't aware of where we're at with those, ECB's de Guindos, interest rate decisions to depend on the data. ECB's not, further monetary decisions must be based on the data. Fed's Williams, rate cut path depends on the data. Fed's Collins said that they should also wait for the data. So all these central bankers are in the same boat as us. They're all waiting for the data. And then we had Fed's Barkin saying that they were clearly on the back side of inflation. This month's data was very encouraging. On the goods side, he hears that pricing power is waning, but on the services side, still thinks firms are exploring raising prices as much as possible. He sees a scenario where they would cut once and then a hold would be sensible. Fed's Collins again said Fed shouldn't overreact to a month or two of good inflation data. Fed's Kugler says likely appropriate to cut rates later this year. Fed's Muslim says that current stance allows the Fed to be patient and assess data, and it could take quarters to see data to support a rate cut. I think we'll guess where his dot's sitting right now. He says May retail sales data suggests a moderate demand growth for Q2. Fed's Logan on the CPI data said it's great to see, but we need to see several more months to have confidence on inflation. Goolsby, last week's inflation number was excellent and hopes to see similar data. So they're all over the shop. Everyone's waiting for data. And we've got none coming out today. So we're going to be waiting a little bit longer. Well, we've got the NBA stuff. I think that still gets released because that's private data. So we should get that. Anything else for anything else, Kate?
Not a lot. South African inflation out this morning. Some were hoping or thinking for a bit of a lower number, but everything came out as really in line. No, not really. We've seen a bit of when the US is always talking about their regional banking crisis and stuff. Don't worry, there's other countries that are on the same line. We saw one of the biggest regional bank, the Norinchukin, which when I was in Japan, they used to call it the chicken bank. It's like the one of the big farmer banks or regional banks over there as well. They managed to lose a lot of money as well on the higher for longer interest rates, and they lost a bit of money on their bond as well. So that's a bit of a story going on in Japan right now, so just to prove to everybody that it's not a US unicum to have a bit of issues with how the banks are handling their bond holdings left, right, and center. For the rest, it's been, nothing really market moving, right, going on. So I think we can move on. Perhaps before diving into, or were you planning to look at stuff to come still, Ryan?
No, that's it.
Because tomorrow morning, before we will do the flow show, we will it's tomorrow, right? We will have the S&P interest rate decision, and so we're really, as we've been saying already, we really limit border here on it's really a dime on its side whether they decide for another cut or not. It would be a big decision, because if they cut again, that is taking the yields down, the interest rate down from 1.5 to 1.25%. That would be quite some move in the current context compared to other central banks. So it's going to be a bit of a difficult decision, I think. We know that inflation is a bit lower, but some of the data have been ticking up a little bit. On the export side, on the corporate side, so I'm not sure whether there is enough food there to really press the button for the other cut. Thing is, though, it's going to be a binary event, because if Jordan and friends decide not to cut, as we have seen the Swiss franc strengthen quite a bit of late, we may be in for that last round of Swiss strength. If in turn they cut, it may also be one of the reasons this Swiss strength for them to cut, because they don't want to undo what they've done for their Swiss corporates. Okay, so it is going to be a pretty important decision, and especially for the next move in all things Swiss franc, in my opinion.
Yeah, very much so. We've got the Norges as well tomorrow.
That's
little expected from those guys.
Yeah, no, very little. Should be a firmish hold. That should be, and I think the dovish tilt may come from a fact saying that we are ready to do something, but that would be a bit of a dovish one. I think it's sort of business as usual for the Norges Bank tomorrow, if I'm not mistaken.
Yeah. Well, let's move on. I'm going to start with Ali. Ali, you're talking about fat fingers, mate. yes, we all have fat fingers. We all do silly things now and again. Put the wrong size in, hit the wrong buy sell button. It's just a question of taking care, mate. You might be in one of those situations where it's happened. You said it's happened a few times now, where it's just playing on your mind a bit. So make sure that your trading head is in the right place. Get enough sleep, your emotions are all right and in check, because I usually make my silly mistakes when I'm tired. That's when I usually do things. And so it's your emotional state, physical state you need to keep an eye on. And but just take care if you know it's going to happen. Just double check everything you do. Don't let it become a regular thing. But yeah, it happens to everyone. And if you hit a 20 lots instead of 2 lots or something, then usually the first reaction is to quickly get out, and obviously you're going to lose money on the difference between the price if it hasn't gone your way, or just the spread if you're just quick enough and it hasn't moved. So it's not a lot you can do about it, but try and learn your lessons, double check what you're doing, and just take a bit greater care, mate. But yeah, it does happen to us. Sometimes you win, sometimes you lose. That's the way of trading. But if I ever do something like that, I usually just get out, take it on the chin. I don't want to start playing around. Or shall I just let it go? Or maybe I'll make a few quid, because usually trader's luck, it'll go against you, and then you end up paying a big hefty price. So yeah, just be careful, mate. I'm sure it's happened to you as well, Kay.
Oh yeah, definitely. We all make mistakes. I mean, it's we're human. Even robots, make mistakes. But no, we are. I mean, it's just part. I mean, the thing is, you just cut it and move on. Or what I'm doing is that if I traded the side that I wanted to trade, I just get rid of whatever excess there is, and I just keep what I wanted to keep, what I wanted to do in the first place. Because I mean, if you click a button, that means you need you want to have some sort of position. So yeah, I just either if it's a plain mistake, I just get out and move on, really. But and I swear a few times and and then move on, because there's no alternative. When you made a mistake, what else are you going to do? You can't blame anyone else. So no, I mean, get it and move on.
Yeah, exactly, mate. I don't know if there's protections now in some platforms where you can set a maximum size that can be entered. Maybe that's something you can look at for your platform. But yeah, just take a bit of care, mate. Right, let's have a look. Yeah, go on, mate.
No, sorry. A lot of platforms have default settings, right? You can choose that when you click to buy or sell, there are some who have a default amount, so you're sure not to do anything absolutely stupid unless you change it manually.
Yeah, very much so. So have a look at that, Ali, whatever platform you trade on. Right, so as we said, not an awful lot going on in anywhere really. So it's going to be a bit difficult to what do they say, make a purse out of a pig's ear. Cable, we had a little bit of a wobble going into the data a minute before. We had a little 10 pip drop down to 127, and that got us thinking in the room maybe there was a bit of a leak to the data, but that wasn't to be, because we pinged up 25 pips after, and we've pretty much stayed up there since. So your range so far for cable is a grand. What are we looking at? Well, according to my platform, it's a grand 30 odd pips, nearly 40 pips. So not a huge amount going on there. No real change for the quid for the Bank of England either for tomorrow. A lot of the market had already discounted June as a cut point, moving further out to August and beyond that. So that's why we've not seen that much of a reaction in the quid at the moment. What we can say is, though, we're back above 127. We're holding above 127. So that's what you're going to take from that. That's your intraday level, at least for today. If we're bouncing off of that, then we might see some upside, but how far that goes, I have no idea. Euro sterling, a little bit similar. We came off a bit on the data. I said that's juicing the last minute thoughts for a June cut. But we're still floating above the main area, 84.20 down to the big figure. I did go long a little bit last night just for a bit of a pre-CPI or into the CPI play, BOE play. So I'm in at 50s. It's offside. I'm not too fussed about it. I'll see if I can run it into the Bank of England and see what comes from that. But if we see a move through 84, I'll probably knock it out and just take the loss and move on. But again, not doing anything massively in size at the moment just because there's nothing going on today. Vol's down as well. As mentioned, I chopped off me China. Kiwi, I'm still long a little bit of that. Again, it's not doing much. We've seen a lot of sideways action, all this consolidating. The trend is still in play, the short-term trends, this uptrend that we've seen, mid-April. It's still in play because we're not even getting down to the 38.2 fib, but it's now, we're pretty much playing the big figure game, 61 to 62. So unless we get a break either side, we're trading in the middle. I'm still long. I'm happy to say long, but I think if I do see another move up to this upside, I'll probably knock a good chunk of that out and just leave a bit on for interest. Maybe start putting my stops up, which is just below this fib here. So we've got some minor levels in between 85, 50, 55. We can't get above. Keep mooching around the 30, 35, and then down into the big figure, though we have been nicking under it by a couple of pips. The bigger level for me is still around this 60, 80, 85 area here. But in the meantime, we're bang in the middle of the range. It's a similar story for a lot of pairs, really. Dollar yen, we've had this move up, had a little pokey above 158, didn't last long. Now we're just grinding. One asset that is trying to have a little bit of a move, despite the US being closed today, is S&P futures. We're up knocking on the 5,500 door, depending on what feed you look at, what futures feed you look at. We could be anywhere around that figure. One of my platforms is showing it bang on 55. I've had a little short up here, just a big figure play. I won't let it go far, 55, 15, and I'll be gone. But I like to give the big figures a go. So have a look at that. Not a lot else going on, Kay. You got anything floating your boat at the moment? Everyone's in dollar rand.
Sorry?
At the moment. Everyone's jumping into dollar rand at this 18 figure at the moment. I'm a little bit as well.
Yeah. I can, unless you want to have a look, I can have a look at it.
Yeah, go on, you can take it, mate.
Okay. All right. So it's something that I was monitoring. First of all, the triangle, then the 18 level. We did move below it this morning. I think it's a slow-mo stop run that we have or had. We are trying to get back above 18 right now. I still don't like the rand much. I still think that once all this election positivity, coalition positivity is done, we're going to start to look back at the issues that they have. And we also, and that's what I said to James this morning in the room as well. I just can't get out of my mind as well their cooperation with Russia and China that is still lingering as well. And I still am not very confident. So yes, I've caught the little knife as well. See where it goes. It's really not a big position, so I'm going to go for a bit of a disaster move down here. I would allow for all of this to happen if it has to happen down in the 1770s. But we are starting to see a bit of a move back above 18. If you look at it purely from this triangle point of view, it needs to get back above 1808, 1810. Then I think we're going to be seeing more of a restoration of the range for one, and potentially the positivity seeing coming out of the rand for now. But yeah, it's a bit of a joint effort, quite a few people in there. I must say, up to now, when we are in joint effort positions, the FA community has usually done pretty well. But okay, I hope I'm not jinxing it with this one.
Yeah, I'm tightening my stop after you've said that.
Oh dear. Sorry about that, mate. I'm so sorry. I should have shut up about that. Yeah, it's okay, but this is the picture. We need to look at the mix, right? It's back up below this like 1850, which was we know a big psychological level, but I think this is getting watered down. But if you look at what happened from the lows, but especially as well from the election result, this is starting to try to hold around this 1835.40, which is just the first retracement level. And I would say that for as long as that little level, that little first level is already holding, that does or should at least tell us that investors or the carry traders or you name it, those who would like to get back into a little bit of a mix because it's still a high yield currency, still proximity with the US for now, would like to enter back into the mix. Well, they are holding back because we are still expecting some bigger decisions out of Mexico, right? On what AMLO and Sheinbaum want to do. So, and this is testifying of this, I think. So, it's a bit of a wait and see mode, but interesting enough to note that we're holding on the first retracement levels. That was what I wanted to say regarding the mix, and then tomorrow S&B. I'm not overly tempted to do anything in Euro Swiss because I I'm still somewhere of the mind that Swiss franc should not strengthen too much further, and we could actually see that move from the S&P, which would send the Swiss franc weak, and of course this would go up. But in case they do not do anything, I think here in the Euro Swiss we could be heading, if they don't do anything at all, if they don't mention anything at all, if they don't mention FX at all. We know that Jordan likes to talk sometimes about FX, but if they don't mention anything at all, I think we could be heading for a little bit lower levels, and why not have a revisit of at least 94.5 or even 94, you know, the broken
Is this
the
his
broken
last
channel.
meeting? Is this his last meeting, or is he around for the September one? Because he leaves in September,
Um,
doesn't he?
so we are 20th of June, 20th of September. Well, that's a good question. He's leaving in September. I'm not sure. I think it may be his last meeting, you know.
That could be interesting then. Let's have a look.
Yeah, going out with a bang.
Yeah, 26th of September is the next SMB. And he's
Yeah,
leaving on
could
the
be.
20th, you say?
Mhm.
He's leaving on the 20th, is he?
I think he's leaving before the next meeting. Eh?
Yeah, okay. I'll look it up quickly while you're having a
Yeah,
chat.
yeah. Interesting enough to note. But anyway, this is it. On the other side, I think if you're looking for stuff like um, dollar Swiss, for instance, we are in between a few levels here with the underside around 88.20, but we have broken below that 88.80 and we're keeping below. So this really needs to be retaken to go higher. And I'm not sure that with the US yields where they are, that we really have enough strength to naturally get back above there. So it's going to need a cut. Okay, if they don't do anything, I think there's also going to be more stress or more pressure, I should say, to the downside. Perhaps even down to 87.30 at one stage. That is all possible. Um, One that I'm keeping an eye on myself is Kiwi Swiss. We've stopped on the 50% of the end of year low here, and then the move higher into 2024. We stopped on the 50%. So this is 154 the figure where I'm going to keep a very close eye on. Get a retest. I may even just a small chip on the table to see if they would be tempted to cut or not, because this could be an interesting level. We also see this is being traded, or it's been traded a bit on each side of it. You know, this is looking a bit interesting to me as well. So that for what is going on today, and yeah, just lastly, look at where we are on Swiss on yen pairs again. You know, the yen pairs, they gradually it's the cross yen holding up the dollar yen, I think, for right. Also helped by JGB yields not really ramping higher, but the crosses are really big. And this time the Aussie yen joined, and I will show the shorter term. But look where we are. We are back. This is your first leg higher on Abenomics. After the global financial crisis, it was already ticking higher, but this is our post-election of Abe, the first really jump higher, and we are back at that level, 2013 level here, and we are really tickling it. So if that would go, I think there may be another couple of big figures in there. And if you look at the shorter term, this is the level that I was going on about. We had like several tries, 104.80, 105 the figure. We're through. Okay, we are now on a small next level here around 105 again, 105 30, 40 zone, but it's still looking quite big, and all those yen pairs are still looking extremely big. You look at the stuff like well, Kiwi yen I showed you already. That's still very big, but even sterling yen now. We are through these 200 3/4 levels once more. We are trading on the 201 zone. If this really takes a foothold here in the low 200s, if we see a bit of a retest, 230, 260, and it holds, why not have a visit in the 203s? And that could be triggered by tomorrow's Bank of England if they decide to still err on the cautious side. That is not explicitly saying like, yeah, we are ready to. Okay, so that's it for me for today, Ryan, and I'll give it back to you.
Thank you very much, mate. Yeah, I just looked at Jordan. The official statement says end of September, so he'll probably get the last meeting in on the 26th, and then he'll be packing his bags and heading off on holiday to spend all his Swiss cap money that he made mugging everyone off all those years ago. Right, so we don't have to worry about his last meeting tomorrow. That's going to be your main risk in the morning, the S&B meeting. Keep an eye on your Swiss pairs if you're trading those. Aside from that, hopefully you find some inspiration today. If not, it's a good day to do the lawn, paint the fence, do some paperwork, and then we'll come back again tomorrow to see what's what with the Bank of England. Have a great day, everybody. Cheers, Kay, and we'll see you all tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.